Today's live crypto market open analysis and Bitcoin trade strategy. Today is 7/1/25. I am currently in a position in Bitcoin this morning. I'll walk you through what I'm seeing here from a top-down analysis. So here on the daily, structurally seeing this as the strong low up here, this being the week high. You can see this strong low was tested and price rejected from this level here, and then we can see price action being bought up here and some consolidation here on the daily. You can also see here there's a breakout here today with a low here, so potential pullback and then continuation lower. With this daily chart, with this buying here, or this delivery to the buy side here, to me this is quite extended. And then we have these moving averages here having the this line in blue being the 9 EMA, and this line in 18 being this line in white being the 18 EMA. So these are exponential moving averages here, and then this would show bullish. So structure showing bullish, and moving averages are showing bullish. Here on the 4-hour, these yellow lines here, this was the opening structural range, or this is the current structural range. Actually, let me put up the opening structural range. Okay. So this was the opening structural range here on Bitcoin, and then you can see here that there with this candle closing below here, that we get a market structure shift here on the 4-hour chart. Also, you can see here with this candle that created a market structure shift. You also get a moving average crossover here to where now the 18 is trading above the 9, or the 9 is trading below the 18. So both of these would give me a short signal. Typically I would not trade against the 4-hour, but currently I would anticipate pullback. So having this market structure shift and also this moving average crossover, I would anticipate pullback at least back to this 9 EMA here. The only question is just a matter of whether or not this is the extent of the market structure shift, at least in this leg. Price could still continue down before returning back up to a moving average or another level. But my anticipation was that it would pull back here from this level. Up here on the 60-minute chart, we can see that these yellow lines here being, and there's a yellow line down here being the opening structural range. All of these purple lines that you're seeing here, these are swing highs and lows on higher time frames. So on the daily, the swing highs and lows from the weekly and the monthly. On the 4-hour, swing highs and lows from the daily. Here on the 60 and the 15-minute, the swing highs and lows from the 4-hour. Again, this yellow line is the structural range high, strong high, and down here there's a structural range weak low here. We can see for quite a while the 9 EMA has been trading below the 18 EMA and starting to get some separation here, and market structure is to the sell side currently, with this being the strong high and this being the weak low down here. So downtrend and trading against the 4-hour and the 60-minute right now. Risky trade, but this is, I'm actually waiting for this trade here on the 4-hour chart. So having this market structure shift here, I would anticipate pullback, as I mentioned, back here to the 9. But for a trade or a longer trade idea, I have an order set here, limit order, set up here at the 62% level of the range that's put in here. So ideally, I want to trade into this trade. This is a skill I've been working on for a while here. It's not worked out very well, but I've got some new technicals to work with, so maybe this would make this trade a bit more viable going forward. And then here on the 15-minute, this orange line that you see here, this is the lower end of the Asian range. And then this yellow line that you see here, this is the structural range here. So this was the opening structural range, this being the strong high and the weak low being here. I took a scalp on this position this morning. Definitely not in my trade book, but was looking for pullback and pullback at levels here. I'm going to remove this Fibonacci retracement tool for now so we can see the price action. But I'll pull back, and I won't pull back enough. But there's an arrow down here. I'll pull it up. That's the line, but there's also an arrow down here. But I took a long about here, and then just for the target here at 106,500. So just a little. When price broke down below this candle here, I took an entry and an exit here. Actually, we can go up to the history. So here at 449, I took a position here, took it off at 502, took the position at 106,263.8 and exited at 106,507.8. I risked less than $1 and wound up with about a $6 profit here. But as I was mentioning here on the 15-minute here, this being the strong high here, and this down here being the weak low here in the, at least for the open of my trade window, my kill zone here. We can see here in this candle, there's a market structure shift as this level is closed above. You can see price action continue and sell off here. With the Fibonacci retracement tool up, I waited for pullback to the 62% level. Was able to get an entry here at 106,385, so a little bit better entry than I had planned to get. So I'll take that for sure. We now have price action back at that 500 level and about to retest the opening structural range for the pre-market here. So then I took the high of the range, subtracted by the low of the range, and then took that number and then multiplied by 90%. So instead of going 200% or a whole distance of the range, I want 190% of the range as a target. And then that target has me, actually we'll come down here to the 4-hour and get a look at everything here a bit cleaner. So here on the 4-hour, you can see my stop loss is just below this area here. So this candle here, this market structure shift, and the EMA crossover candle here, there's a 10-cent spread on Bitcoin. So the low here is 106,222. So my stop loss is 106, 221.8. So 10 cent spread, so a 20-cent stop here. And target is up here at 107,047.4. So this wound up being 190% of this range here on the 15-minute chart. And it just happens to coincide currently with the opening structural range here on the 4-hour. It would be the what would have been the previous strong low that looks like would come back and be retested here based on my profit taking. That's where that level would be. Also very close here to the 9 EMA, but the 9 EMA will start to creep up if price action continues to be delivered to the buy side. But this is what I have currently this morning in Bitcoin. Bad behavior and a scalp this morning, very risky trade, and now a planned and structured trade. I consider it risky because I just up to this point have not done a good job of entering this trade, but with the price action this morning and the current or at least with the new parameters that I'm trading under my new system, this may actually be allowing for this trade to actually work out. This is the first time I'm attempting it with the new system, and actually I am going against everything I agreed that I would do because I don't want to trade against the 60-minute, and I don't want to trade against the 4-hour. I will trade against the daily, though preferably I want all of these time frames to be in sync when I take a position. But knowing that as price delivery changes overall on these higher time frames on the daily and on the 4-hour, there's going to be some transition time here on these lower time frames where there likely won't be a position. So for example, with the 15, the 60, and the 4-hour all trending down, to take a sell position here, even though it lines up with everything, to me would be even more risky, because now with the selling that's been delivered, I would anticipate pullback just on the smaller time frames or the lower time frames. There's continued pullback after price has been delivered in any type of meaningful way or any kind of displacement. So with this kind of displacement, I would anticipate some pullback. It's just a matter of do you enter or is your entry appropriate, and can you hold on until you get to your target, which is counter trend. So we'll see how this trade goes. If all goes well, we'll get some pullback on the 4-hour and at least be able to see this trade to fruition, and then possibly pick up the short if price continues here. If not, the price may continue back down to the short side, and then I'll look for entries here on the lower time frames. But basically, today just trying to do a better job at taking my risk to reward setups. Up until today, I've been more focused on just trying to get into every trade that was possible to gain entry into. So using the 9 EMA, which would be the lowest hanging fruit, so to speak, for entry, but then taking quite a bit of drawdown, and then averaging somewhere around about 1-to-1 risk to reward, or maybe 1.5 risk to reward. I want to focus now more so on taking trade opportunities with at least a 3-to-1 risk to reward. So being willing to pass on some trades, also being more focused on market structure in addition to just the exponential moving averages. Sometimes the exponential moving averages can be a bit delayed. So for example, if today winds up being long. The moving averages here on the 15-minute would take some time to catch up, where the structure has already tipped the hand of any institutional players. But whether or not this structural or this market structure shift is valid still remains to be seen here. But from what I'm seeing price action wise, I feel like this is as good of a position to be in, especially my entry here. One of the things I've struggled with, not as much with as far as in being able to take the entry, but the amount of trades that fail. So taking a long while sub is being delivered, or taking a short while price is being delivered to the buy side. When you lose a number of trades like that, at least for me, I started looking for more confirmations and things like that. But with this, with my current system, I'm assuming I'm reading price action or order flow better, because, or at least the way that this position is working out currently, being able to take the long while price is being delivered to the sell side aggressively here is now looking like it could potentially pay off here. So I wanted to really dial in and do a better job of getting the appropriate risk to reward, which is causing me in turn to be more patient and take better setups overall, I think. So we'll continue to see my progress as this system, let's say, or as I go through this discovery process here with my trading system, just trying to find daily trading opportunities if possible, or at least being able to trade the majority of days. I don't want to just jump into things, but I do want to trade mostly based off of these higher time frames, and then using the lower time frames here to looking for confirmations and entries based on what I'm seeing here on the higher time frames. And also with this daily chart here, with the amount of extension here in this range, I would anticipate seeing some pullback, at least back here to like somewhere near like an equilibrium level here, before I would be interested in going long here. You can see the daily here now trading here at the non-EMA here, and looks like it put in a test of the 18 EMA there as well, which could be or at least with these three time frames, with price action being delivered overall to the sell side, still having bullish structure and bullish moving averages here on the daily, could likely provide the momentum needed here in order to see this pullback come through. We're about 2 minutes here from the open of the New York session. And we'll see what price action has to offer once the New York market opens. Less than 1 minute now. The current 15-minute candle is now trading above the structural strong high, or the previous strong high structurally here. So to me, this would be a positive sign and symptom of potential continuation, getting a potential candle to close on the trade side of an important level here intraday. So if this candle holds or continues, then there'll be a close above the opening structural range high. And this would also place the entry before the Asian range high, which is here. So this entry well before, and target is just within the Asian range here. And we're approaching potentially breaking out of the range that initiated this price action or this trade, 106.6564. Okay, so that was a test of the current structural range, and then we'll see if we can get a breakout. And now we get a breakout of the current structural range, and price being delivered to the buy side currently. And some consolidation here. The U.S. market, New York is now open with this candle here. See price being delivered to the buy side here at the open. Let's see. New 60-minute high has been put in here. Price still being delivered to the buy side. Some consolidation here. You can see here on the 60-minute that price is here at a level here. This is a swing level here on the 4-hour, either a swing high or a swing low. Also at the 9 EMA here on the 60-minute. So this could be why price is seeing some consolidation here in this area. Could be potential profit taking, or just the price delivering algorithm here, creating a scenario where they could be potentially trapping sellers or enticing more buyers, or vice versa, trapping buyers and attracting more sellers. And price pulling back, delivered to the sell side, now consolidating with some buy side delivery here. Only I could get that order to pop up on one click all the time. Usually when I'm trying to get the order to pop up, I've got to click it multiple times or check a different chart, because I've got some lines in the way or some levels in the way. Price being delivered to the buy side currently. So entering trades where I'm only getting the risk to reward that I want to see, it is likely I will miss some trades, but that is okay. 1-to-1 or 1.5-to-1, as opposed to this trade, which is a 4-to-1 trade, or the scout earlier, which was probably over 5-to-1. Just being selective, and then making the best of any opportunities that you take. So I can say now being more interested in having uh, fewer trades with appropriate risk to reward, as opposed to having more trades with a reduced risk to reward. I know there are some people out there who trade like one-to-ones and things like that. If the probabilities are high enough, then absolutely that makes sense. But for me, a one-to-one situation is just not going to work from a psychological perspective. Any trading system is going to experience loss or drawdown, and then to be able to make up the difference one-to-one, to me that would be very painful psychologically. If I took a series of losses and then know it's going to take me that much longer, or just as long, if not maybe even twice as long, to, let's say, break back even, to get back to that point. So I personally require, or let's say for trading sanity, require being able to make up for losing trades with winning trades. So at least a 3-to-1 for me. And I'm really trying to focus on this 62% level. I'd love to get into the 70.5 or 79, but I don't want to be greedy, and definitely want to make sure I get into positions. If I really wanted to give myself a harder time, I could choose equilibrium, but I feel like or at least equilibrium is an option if it's at 3-to-1, but I really want to focus on this 62% level, just because from my experience, just like a rubber band or a slingshot or a bow and arrow, anything that uses resistance bands, like all these things that use resistance in order to generate pressure. Seeing the same thing in markets, where if you would anticipate a larger move, you would anticipate some wind up or some pullback before that happened. So just understanding that some of these trades don't really pull back, and they could go just as far as something that wound up, or something maybe based on a higher time frame. But from what I'm seeing, if I am more patient and wait for better risk to reward setups, I'm likely, or not likely, I am highly confident that my let's say winning percentage would increase dramatically. And being in trades is one thing, and when you're motivated or anxious or have a lot of FOMO, you want to be in everything, or anything that's moving, as opposed to if you want to be profitable or be consistent over the long term, making sure that you have staying power. And to me, that is being able to manage losses both financially and psychologically. So being able to take a loss is one thing, but when you know that your next trade, if it is a winner, could possibly not recoup that loss, or if you have 2 losses in a row, understanding that it will take you 3 trades in order to be profitable again. To me, that's challenging, as opposed to if I lose 2 trades and then take 1 trade, I'm back profitable again. So to me, that is more ideal to how I want to trade. That way my losses are not as impactful as my wins. Price being delivered to the sell side here. This candle does not look healthy for the long side right now. And this candle coming back, testing a level, trading through it, getting a reaction here off of the 9 EMA. Price consolidating here. So getting some volatility here in the New York Open. Price being delivered to the sell side and consolidating. Price reacting from a level up here, now putting in an engulfing candle here. This is normally where I want to get out. This is not good, but I'm going to let the price action play itself out here. But this is a monster engulfing candle here. We'll see if it holds. There's a reaction near the 18 on the 60-minute and a swing high or low there on the daily. So it could be a reaction off of one of those levels. Price consolidating here. Wow. Price now being delivered to the buy side with some consolidation. So what looked like pretty easy and early day has now turned into something else. But it seems that Bitcoin has just gave back all of its morning gains, or all of its pre-market gains, as it still consolidates here near the low of the current candle, which would be near the low of the price action that initiated this buying here. Now price being delivered to the buy side with speed. Price trading near the 106,420 level, 106,400. Very aggressive 15-minute candle here. See if we get continuation of price being delivered to the sell side here in the next candle. If so, I'll likely be stopped out pretty quickly. If not, then I would anticipate to see price return to buy side delivery here. But with this manner of engulfing candle here, I'm going to imagine I'm going to get stopped out sooner than later, unless price really and just as aggressively returns to the buy side, either in this candle or immediately in the next. You can see these levels here being tested and likely going to stop me out here. And this is what I mean by this trade being a very risky trade. If this trade doesn't work out, my quest on trading into a higher time frame trade may go back onto the drawing board. Less than 1 minute remaining in the current candle. Price being delivered to the buy side here. And some consolidation. buy side delivery. And sell side delivery with the open of this current 15-minute candle. Consolidation, now buy side delivery. Price now trading above my entry, right at my entry, or price consolidating here around the 106,400 level. More buy side delivery here with speed. Price at the 9 EMA on the 15-minute. Price consolidating here. And price being delivered with speed, trading through the 9 EMA, still consolidating here. More buy side delivery, price at the 18 EMA and at a swing level. Buy side delivery with speed. And price may be about to test that opening structural range high. Still consolidating near the 18 and the swing level on the 4-hour. Price trading at 106,500. $106,520. Price testing that opening structural range high and reacting off of it. Price being delivered to the sell side here, back to the 18 EMA and that swing high or low level, that swing level from the 4-hour. Price at the 106,520 level, consolidating. $106,550. Price being delivered to the buy side with speed. Price now trading above the opening structural range high. 106,600. $106,620 with speed. Consolidation back to 106,600. So with that engulfing candle coming in like that, definitely made me want to exit that position, but trying to do a better job of just letting price action play out, and again having the let's say mental fortitude to take a loss becomes much easier when you're having risk to reward ratios of 3 to 1 and 4 to 1, as opposed to 1 to 1 or 1.5 to 1. So with this trade being a 4 to 1, if I lose it, obviously it's a 1 R loss or a 1 risk unit loss. So if every trade is a 1 risk unit loss, then they should all more or less feel the same or be treated the same, as opposed to your wins, which would be 3 or 4 risk units. So being able to stomach that kind of order flow has definitely been made easier with having proper risk to reward ratio. And now Bitcoin now back testing the high of the current range and now trading above the high of the current range, and now potentially testing the 106,700 level again. Now at 106,700, price being delivered to the buy side with speed, 106,720 level. So potentially Bitcoin now ready to test the previous high here, 106,800, 106,820, consolidating here. So the high of this previous 15-minute candle is 106,831.3. So we'll see if Bitcoin wants to break out of this previous 15-minute candle, either in this candle or the next. We're a little over 5 minutes into this candle, so a little under 9 minutes remaining. See if we get continuation either in this candle or in the next. So definitely some volatility here in the New York session here. So with that previous candle under normal volatility, or I doubt if that type of candle would form under, let's say, average or lesser volatility. But with any kind of price action looking like that, if there was continuation in any following candles, I would anticipate it would likely take all day or the rest of the day in order to reach the intended profit target. But with the volatility in the previous candle now being matched by the volatility in the current candle, it's possible I could still reach my profit target, and still possible profit target can be reached before day's end. So interesting seeing the volatility come in here with the US Open, and also already being in a position, so not looking to take anything, but having to survive the drawdown here. Price consolidating and now having some buy-side delivery, potentially setting up for another test of that previous 15-minute candle high. Price consolidating here around the 106,750 level. Buy-side delivery. Price trading near the 106,780 level. Trading in between that and 106,750. I would say consolidating between 106,750 and 106,780. Getting some sell-side delivery here. More consolidation. Sell side delivery and consolidation, still at the 106,750 level. trading down to the 106.720 level. Less than 5 minutes remaining in the current 15-minute candle, now at 106.700. Price being delivered to the sell side here. I may hit profit target today. I may not. We'll see how price action continues here, but I'll keep an eye on things as we go. But definitely an exciting morning here with the New York Open. We'll see if later today I'm able to take profits or if I get stopped out. Also the potential I could just be in some consolidation for a while, depending on how these following candles set up. But we'll see going into the rest of the day what we have. But so far, so good. And this is On Tilt Trading with this live crypto market open analysis and Bitcoin trade strategy. We'll see you next time.